The S&P 500 was unable to keep up with its recent winning ways. We did close lower for the first time in 6 sessions. However, on the bright side, we still managed to close above the key 3,000 level on the S&P 500. We also saw the Dow Jones Industrial Average hit a new all-time high on an intraday basis, and all 4 equity indices here in the United States ended with what's known as a bullish intermediate confirmation signal according to the market forecast technical indicator. So I'll explain what that means, and I'll also take a look at a new trade setup from the consumer, which has stayed fairly resilient despite all of the trade tariff talks out there. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's July 16th, 2019. First of all, if you are new, welcome aboard. Remember to go over to YouTube, click subscribe. While you're over there, make sure you check out our description area where you can sign up for our email distribution list to be notified whenever we do post these videos, and also to give you a heads up on what stocks in the S&P 500 are giving you overbought and oversold cluster signals. In addition to that, we're heavy users of Twitter. I would encourage you to follow me at Brandon Van Zee, and remember to click like and retweet anytime you get value out of these Market Outlook related posts. Lastly, we have a presence on Facebook. Feel free to join us in our group in the web address embedded in the logo in front of you. All right, with that, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up here in front of us for those of you that are premium members of Market Scholars. Remember that you can get the access to all of those charts in the resources area of our website. All right, let's go ahead and now take a look at some of the action here today. You can see that the S&P 500 did manage to close at 3,004, so again above that key 3,000 level that everybody got excited about last week. We saw the Dow Jones actually hit a new all-time high here today, so that wasn't just a yearly high, that was an all-time high there. Now note that the Dow Jones did end up closing lower today, not by much, only by 0.09%, so it's not the biggest deal in the world, but nonetheless, nice to know that we were able to push to a very brief all-time high there before a slight pullback. And then notice down below here, we do have all of our indices in the green. In other words, the background colors of these charts will tell us whether we have a bullish or bearish posture using the market forecast technical indicator. And the green background reminds us that we have a bullish intermediate posture. Remember, that can be different than the near-term postures and momentum postures and different things like that. But for our purposes here, by default, we generally refer to posture as our our intermediate term posture. And from that perspective, we do have kind of a clean bill of health there from a bullish perspective. Now, what I mentioned in the intro is that not only do we have bullish postures across the board, we also have a kind of an additional signal set up as of tonight called a bullish intermediate confirmation signal. Now, in order to have one of those signals, what you're looking for is the green line on the market forecast technical indicator to be either rising, like as an example back here on the S&P 500 in kind of the first week of June. Notice that green line was rising between the lower reversal zone and the upper reversal zone. So that would be considered bullish, and that's why the background color of the charts at that time were starting to turn green. Or simply having the green line in the upper reversal zone, whether it's going up or down, doesn't really matter. As long as it's in the upper reversal zone above 80 on the market forecast, we also consider that to be a bullish posture. So that's step number one. Recognize if we have a bullish intermediate posture, which we do here in this case. In addition to that, we're also looking for that red line to be in the lower reversal zone. Now that one, it does have to be in the reversal zone. It can't just simply be traveling lower. So you'll notice here as an example on the S&P 500, we've got that red line, the momentum line. It's at 9.97 and falling. Now the lower reversal is at 20, and so 9.97 is obviously below that. So that's what makes up a bullish intermediate confirmation signal. Now in addition to that, sometimes we're also going to look at where the placement of the blue line is. Now technically the blue near-term line is not part of that particular signal, but nonetheless, we generally like to see that blue line at between 50 and 20, somewhere in that general vicinity. You will notice that right now the blue near-term line is at 52, so it's just a hair outside of that range, but it's within spitting distance of it, so it still could be a legitimate signal here. But basically the idea behind the bullish intermediate confirmation signal is it's a buy the dips type of a mentality. In other words, we've been waiting for a pullback. We haven't received one. Today we finally got one. Now it's not much of one. admittedly. But, when you're in an uptrend like this, beggars can't be choosers sometimes. There are times where it just seems like the market is taking off without you. So you have, these mini pullbacks that are experienced along the way. Sometimes those can be opportunities for you to either establish a new long position or perhaps reload the gun on an existing long position that you didn't feel like you had enough exposure to prior to that. You will notice that the last time that we had this bullish intermediate confirmation signal here on the S&P 500 would have been back here the final week of June. That was during this pullback period right here, where we were in an uptrend. We were in a bullish posture from an intermediate term perspective, and then we had a little bit of a pullback in price where that red line went into that lower reversal zone there. Now note that that was a little bit of a stronger pullback than what we experienced here today. So just because we got a bullish intermediate confirmation signal today does not mean that we won't get another one tomorrow, right? And that's what happened here at the end of June. We had one there on June 24th. We had another one there on June 25th, and even another one there on June 26th. So that was a rare case where you had 3 days in a row with that bullish intermediate confirmation signal. We're kind of in that vicinity now where it might make sense to look for some opportunities if you felt like you were a little bit underexposed to the market up until this point. Some of the other indices here also have that signal, but the blue lines are in different places. Note that the only one that has the blue line between 50 and 20 is actually down below here on the Russell 2000. Now this one has been the one that has kind of lagged markets more than other indices. You can see that the trading range we've been in on the Russell 2000 has been extremely tight here for the last 2 or 3 weeks or so. You can also see that we haven't come even close to touching a new all-time high from back here in the first week of May, whereas the other indices have been touching all-time highs here within just the last 2 trading sessions. So this is the one that has not kept up from an intermediate perspective. But at the same time, it hasn't really broken down either. It's just really gone nowhere here. So for those of you that are trading iron condors, at least selling iron condors on Russell 2000, you're probably thankful for that. If you're looking for some directional activity out of some of your small caps, perhaps you're not quite as excited about those prospects. Seems like the trends right now continue to be with some of those larger cap players that are out there. So again, all of our 4 indices have the red line below 20 right now, and all of them happen to have the green line above 80 right now. And so we do have bullish intermediate confirmation signals across the board right now. Again, that's for those of you that are looking to buy the dips as opposed to buying a breakout type of a situation. All right, let's now take a look at our next chart setup, which will be our 3 green arrows chart setup. This will be chart 4C. And when you see a green background color on this particular chart setup, it means that we have what's known as a 3 green arrows signal. And that's just a way of talking about 3 different technical indicators that are currently set up bullishly. Well, right now, we have 2 out of these 4 charts that have that particular 3 green arrow signal. We have the Dow Jones, which, as I mentioned before, hit an all-time high today, so that makes sense. But then we also have a persistent strength out of the NASDAQ down below here. So kind of kitty corner to one another there. Lower left and upper right charts have the 3 green arrows set up. Note that we did have a 3 green arrows on the S&P 500, which is our chart in the upper left, up until today. Today was actually the day that you got a red arrow there on the MACD histogram. So that signal is no longer valid on the S&P 500. And we haven't had a 3 green arrow signal for about a week on the Russell 2000. So right now, again, kind of those mega cap players there out of the Dow Jones, and then some of those maybe bigger tech players like Microsoft and Adobe and Amazon and those types of companies that make up the NASDAQ composite performing reasonably well. Let's go ahead and now take a look at our next chart setup. This one will be chart 4D. And this is our longer term chart. Remember, these charts are 3 years in length. Each one of the candles you see is 1 week in length. And what we're looking for are crossovers of the moving averages themselves, which denote either a golden cross for a positive crossover or a death cross for a negative crossover. And right now we do have golden crosses across the board. The one that has been the most recent news story, I guess you could say, is the Russell 2000. About 2 weeks ago, we did get a bullish crossover, which is why we see the background color of this chart for the Russell 2000 now green. And that means that this orange line, which is represented by the 10-week moving average, went up and through the blue line, which is the 40-week moving average. Prior to that, it was kind of waffling a little bit lower. So we're kind of back into mode. These other charts were more resilient than the Russell 2000, and the Russell 2000 decided it wanted to kind of get back in alignment with where the other charts were heading. Now, again, it's not as strong. Price action is still a lot lower than where the Russell 2000 was trading. In this case, you go back to the all-time high would have been August 27th of 2018 or thereabouts, that particular week. So you can see where we're at right now. It's still a long ways away from that, as opposed to the all-time highs that we've been hitting just this week on all the other three indices there. So Russell 2000 is playing catch up, but the good news is you got to start somewhere, and right now we've at least got enough oomph out of price action to give us a bullish crossover using the 10 and 40 week moving averages. Let's go ahead and now take a look at our next chart setup, which will be chart 4E. This will be our 12 grid setup here. Now remember, on these 12 grids, the background colors of the charts will tell you whether we have a bullish or a bearish intermediate posture using the market forecast. So when you see a green background, it means it's bullish. When you see a red background, or a pink background, I should say, it means that it is bearish. And so right now, I kind of have a mixed bag here with this first set of 12 grids, which is the inner market analysis 12 grids. Some of the charts that we've been looking at a little bit more so than others have been things like interest rates. We have had a fairly decent pop out of interest rates over the last week and a half or so. So note that the 10-year is now at 2.12%. So it has risen here a little bit more recently. So you'll recall that it was at 2% here not too long ago. So it's up about 12 basis points here in a fairly short amount of time. Of course, the opposite effect of that is that bond prices themselves fall when interest rates rise, and that is what we've seen here out of TLT. In fact, this has fallen fast enough where you're clearly trading below the moving average, and that moving average is actually tilted lower. Notice that moving average there on TLT is now red, signifying that price is below a falling moving average. So that happened pretty quick because TLT was just spouting off new highs here right on July 3rd. That's not really that long ago, a couple weeks. So TLT, keep your eye on it. It's in a precarious position now after making such an aggressive move over the last 3 months. Remember, despite the pullback over the last couple weeks, we're still up 7% on TLT, which, remember, that's a big amount for a large government bond market like we're dealing with here. Some of the other areas of interest have been the U.S. dollar. Note that we had a very strong day on the U.S. dollar here today. We were up 0.46% on UUP, and you'll notice that this was a big bounce off of that moving average area. However, where it takes us is right exactly to where we have a resistance area. So we'll have to see if that means anything, whether the traders out there will use that as an opportunity to sell it off. We'll find out as soon as tomorrow, but it's kind of interesting because there's actually 3 separate touch points to that resistance area. We have the first touch point back here on April 25th. We have another one here on June 18th, and then we have our third one here on July 9th, and that's kind of right in that general vicinity of where we ended the trading session here today. Now, obviously, we were able to get up a little bit higher than that during the end of May there, but the resistance area where we find ourselves right now might actually be considered equally as important, simply because it had 3 separate touch points over a 3-month period. So we'll be watching this area very closely, and of course, even if you don't trade the US dollar, it may very well have an impact on your other trades that you have. Remember that the US dollar has an ability to affect commodity prices. It also has an ability to affect foreign stocks and ADRs that you might be trading here in the United States as well. So keep your eye on that. Tomorrow likely going to be an important day for the US dollar one way or another. You will notice that crude oil was down significantly here today. Now notice a lot of other news going on, whether it's North Korea or Iran. Both of them were in the news here today, so a bit more saber rattling back and forth, but the market has kind of absorbed those headlines fairly well, because we've heard a few of those headlines now for quite some time. So getting used to the idea that that's going to have to be a continual theme that we deal with. But nonetheless, crude oil prices did fall today. Now, note that the background color of crude oil is still green, so we still have a bullish posture, and we're still trading above a rising moving average as well. The chart doesn't look all that good. I mean, if you look at that chart versus gold, I would say gold looks more interesting from a trend perspective. But nonetheless, after a big move lower in crude oil, they're trying to establish a higher low on crude oil above a rising moving average, and that can be an important reversal signal there as well. Let's go ahead and now take a look at our next chart setup, and in this particular case, we're going to go with chart 4F, and this will be our foreign stock markets here. So as we pull this up, again, kind of a mix of green and red charts on the board here. I would say that most of these charts were lower today. So remember, a lot of times stock markets are correlated to one another, but in addition to that, with the big move higher in the US dollar, you're going to have more pressure against these particular foreign stock markets as well as a result of that. So there were a couple that bucked the trend. India was up today. It was up 0.27% here today. Another one that bucked the trend would have been South Africa. It was up 0.07% today. Again, remember, South Africa is a little bit more hooked into gold, silver, some of the other metals markets out there, so perhaps that's a reason behind it. But out of all 12 of these charts, those are the only two that finished in the green. All the rest of them did close slightly lower here today, and although a lot of them did close lower, many of them were still able to retain their bullish intermediate posture. Now, some of them that are looking a little bit more concerning would be the United Kingdom. Notice that the United Kingdom was down over 0.5% here today. Not only that, but you're basically closing at a 3-week low on the United Kingdom as well. And this is represented by EWU. That's an ETF that you can trade here in the United States that does a decent job of tracking stocks in the United Kingdom. But nonetheless, we're closing near a 3-week low on the United Kingdom. We have a pink background of the chart, so the intermediate line is at 45.8 and falling. And remember, if you ever wanted to see that market forecast just to verify it with your own eyes, if you're using chart 4F, just right click on the chart and go to maximize sell, and then that will show up down below, so you can more clearly see that that green line is starting to drift lower here, and so that's why we have that pink background color. It is considered to have a bearish posture right now. And of course, price is below that moving average at this point as well. Now, the moving average itself is still trending up, so that's why it's yellow as opposed to red. But if price action continues to head lower here on EWU, that moving average will eventually start rolling over as well. And at that time, it would turn red, kind of like we saw for this extended run lower back here in May. So keep your eye on EWU. That one appears to be the most precarious of these 12 that we have on the chart, on the charts in front of us right now. In terms of the stronger charts out there, there's nothing that's really eye-popping to me. I would say that Brazil remains decent. Now, it has had 4 days in a row to the downside, but notice that the technical damage has not been very extensive here on EWZ for Brazil. Yes, we've had 4 in a row candles that are red. I don't necessarily like to see that, but remember, markets don't go straight up every day. We need that inhale-exhale process to keep the bull market alive. Right now, you're taking a little bit of an exhale there, but it hasn't damaged the chart. We are still trading above a rising moving average. We still have the green intermediate line in the upper reversal zone, so we still have a bullish posture there as well. And I don't see any destruction of any major trends from a price candle perspective there either. So keep your eye on EWZ. That one looks kind of interesting for a bullish setup once it decides to bottom out here, whether it takes a couple days or maybe a week or so, who knows. But as long as it remains above that rising moving average, I think that one's one that you can kind of keep on your radar there for a possible bullish setup going forward. Let's go ahead and take a look now at our next chart setup. This will be chart 4G. This is our U.S. sectors 12 grid. Remember that the chart you see in the upper left of this one is the S&P 500, and then all the 11 charts after it will be the 11 different sectors that make up the S&P 500. So for the most part, we have good news here. You know, we only have 2 charts on the board that are pink. We've got healthcare in the lower left, we've got real estate in the lower right, and everything else is green. So for the most part, we remain in a fairly resilient market here in the United States despite today's pullback. Some of the charts maybe look a little bit better than others, but nonetheless, for the most part, you'd have to believe that if you're holding a portfolio of long stocks here in the United States, you're reasonably pleased with how things have shaken out here recently. Now, one of the areas that I did want to point out is the consumer discretionary space. Note that we were right up there at basically a new all-time high on an intraday basis here today. We did close a little bit lower, but this has been one of our stronger charts out there recently. It's been, you know, day after day, it seems like, with XLY right here, where prices are higher and higher and higher. So that one has been on a very nice run here recently. Obviously, the intermediate line is at 98. Remember, that can only go to 100. So that's a very strong reading there. In other words, this is a very bullish intermediate posture that we're dealing with here. And we also have a rising moving average there as well, which is why that moving average itself is colored green in this particular case. So that's the one that I kind of wanted to focus on for our trade application example here today as well. The other thing I'd point out real quick, notice that the staples are also hitting new highs here today. So both discretionary and staples look pretty strong right now. Now remember, the thing that ties those two together is the consumer. You know, the full name of them is consumer discretionary and consumer staples. So right now, the staples seem to be outperforming their defensive brothers and sisters out there, or your interest rate sensitive brothers and sisters, depending on how you thought of that. But one of the reasons behind it is, you know, there's a lot of evidence out there that suggests that the consumer is in very good shape, whether they're buying, you know, bananas or boats, or perhaps banana boats. They're both doing pretty good, the staples and the consumer discretionary areas. So anyway, that seems to be where we're seeing a little bit more of that trending type of action out there. So our trade application will come from that area here in just a little bit. Real quick, pop over to the internet, say thank you to those of you that click like here on these. 96 of you did that for me last time around. We really appreciate that. Remember, that's your way to tell David and I that you want us to do this video tomorrow. That is the main thing that we look at as far as the different social media engagement that we're getting out there, is how often you guys are clicking on like. So if you want us to continue to do the videos, click like, and we'll be in good shape there. We do appreciate those of you that faithfully do that each time that we do the video. Of course, I had my dividend growth investing class earlier today for those of you that want to watch a battle between a couple of Dow Jones industrials versus one another. And then David had his directional option strategy class as well. Both of those have been recorded. Tomorrow, we've got our options inventory trading class that David will be teaching at 11 a.m. Eastern Time. And then I'll be teaching my Strategy Lab swing trading class for our premium clients at 2 p.m. Eastern Time. And we've had a heck of a run there in Strategy Lab recently. Hope I'm not jinxing it. But we've had a lot of swing trades going in our favor, profitable trades here recently. So we're going to see if we can keep that win streak alive there. So if you are a premium member of Market Scholars, make sure you're taking full advantage of those resources there as well. Also wanted to quickly point out that I posted the dividend growth investing increases tweet here within the last week or so. And I wanted to point out that there were a couple of them that kind of ticked all the boxes for us. So Cummins, which is that stock that you see up at the top, notice that under the yield, it's listed in blue, which means the yield is more than 3%. The number of years, which is the column over, is listed in orange, which means that they've raised their dividend for more than 10 years in a row. And the final column, which is the percentage increase of the dividend itself, was 15%. And since that's above 10, that's shaded there in green color. Notice that down below here to the left of my mouse now is MSC Industrial Direct, which is ticker symbol MSM. That one also had all three of those colors represented there. So it's fairly rare when you get a high yielding company raising their dividend at a very rapid rate and has a long history of increasing that dividend. So for those of you that are dividend growth investors, perhaps taking a look towards Cummins and MSC Industrial might be worth your while. All right, let's now go ahead and come on over to the paper money account again. And we'll set up our trade application here for the day. Let me come on over here to chart 4A for this. And I want to type in ticker symbol ULTA. All right, so this is a retail store that's kind of taken the world by storm, at least here in the United States. To give you an idea of how well this particular makeup and hair and shampoo chain and all that kind of fun stuff. I think they even do salon type of stuff there. I know my wife's been there a couple of times, but nonetheless, it shows up in a lot of urban strip malls these days and has done very brisk business over the years. If you look at a 10-year chart on this thing, it's been one of the true success stories of this stock market over the last decade. Ulta was as low as $10.06 10 years ago. It's now $360 stock. So that is a massive amount of outperformance here over the last decade. And you can see that we're trading very close to all-time highs yet again here, where we stand right now. It did catch my eye today because it was bouncing up and away from that moving average, just the way that we like to see them. Also note that the market sentiment line is finally turning around as well. That orange market sentiment line that you kind of see, this dotted line here, it was going lower up until just the last couple of days. Now we've got just enough juice to the upside where it has reversed a little bit higher. I know that's really hard to see it with your naked eye right there, so that's why we put that in the label itself, that it's at 63.19 and rising, because that rising part will be important in this case to let us know that that is considered to be a bullish market sentiment posture now as well. So what I'm going to do here is I'm going to do what's known as a bull put spread. It's a credit spread, where you're selling one strike, you're buying another, and you're going to end up with a credit in the end as long as the stock doesn't fall apart. One of the things I liked about this chart is that it seems to be respecting its moving average here recently. So if I can get a break-even point somewhere around that moving average, and I assume that the next time it comes to this moving average, it'll do what it did last time, which is it came down there and then bounced off of it, we could still end up being in good shape on that trade. Another reason that this one kind of caught my eye here is that they're a little bit off cycle in terms of when they report earnings. Of course, today we had stocks like Wells Fargo and JP Morgan before the bell, and then we had stocks like United Continental and CSX after the bell. So we're in kind of that heavy period of earnings reporting now. But this one just recently reported its earnings on May 30th, which means, 3 months after that, it'll probably report earnings at the end of August. And therefore, if you're trading the August monthly contracts, those should be expired by the time this company reports their earnings. So that way you don't have to hold your trade through an earnings announcement if you don't want to. So let's go on over here to the trade tab. And you can see I've got the trade. Actually, it's not this one that I wanted to do, so hang tight. There we go. And let's go ahead and come on over here to the put side of the equation. I was testing this one versus a long call spread. I wasn't quite sure which one I was going to go with, but I think I ended up wanting to go with the sold put spread. So in this case, I'm using the 350. So I'm going to right click on the 350 and I'm going to go to sell vertical. Now down below, I did change this from a 345 to a 340. So in other words, I'm selling the 350 put, I'm buying the 340 put. Now note that that results in a credit of $2.30. And that's right there at that 30% return on risk that we look for. Remember, you can figure that out by clicking on confirm and send, and then taking your calculator and taking the max profit amount, which in this case is $230, divide that by $770, which is the max loss, and it's a 29.87% return on risk. So in other words, if you round it up just a hair, you got your 30% return on risk there. Now, again, what I was targeting when I wanted to look at this was, what is the break-even price? Now, note that's listed there on the order confirmation dialog as well, and it's at $347.70, $347.70. So if I come back on over here to the chart, $347.70 is basically right there, somewhere thereabouts. Can't get my mouse perfectly on it, but you can see that it lines up right on that rising moving average. So again, that was part of my thinking with this trade. I don't necessarily need this stock to go up, another 20% in the next month. It's not a directional trade. I just need to make sure it does not fall apart completely. Now, of course, if it does, that's why we're doing the spread. We are covered anything below 340. We don't want to see that happen, but at least we're covered in case it does. But in this particular case, if you believe that Ulta Beauty will continue to go gradually higher and continue to bounce off that rising moving average for the next 31 days for the August contracts to expire, then perhaps this could be a trade that is useful for you. So I'm going to go ahead and click confirm and send and ship that off, and we'll see if we can get filled first thing in the morning. All right, well, thank you for joining me here once again today. Looks like the stock market had a little bit of a breather today, but all things considered, we're still in pretty good shape. Bullish postures across the board. In fact, we got bullish intermediate confirmation signals across the board as well. So with that, I want to wish you all the best of success with your trades and your investments. If you got value out of tonight's video, we would encourage you to click like on Twitter. Have a great night, everybody. Bye-bye.